Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Today, we are talking about some of these factors that are going into this potential tight window, I should say, rather a dense window of potential ETF FTD settlements from across a number of different ETFs. So we're going to be breaking down that today, as well as some of our data from the options market that may be informing us as to whether or not options traders are in fact betting on an unfolding of the price action that would potentially be attending to that or accompanying that FTD settlement. So that's coming up today. Before we do, obviously, we have to head over to our gratitude first. And today's gratitude goes out to, once again, Adam Graff, right, for basically sponsoring every single newsletter in the past, newsletter and video over the past 4 weeks. So many thanks go out to Adam Graff, aka AmGoBlue, as well as to our monthly supporters, Not Medical Advice, Cosmotropic, Despite 52, and Faithless Looter. Hey, Luckies. I also want to go ahead and give a special shout out in the monthly group to Kurt Lusko, aka Short Fridays. Although he's not actually like signed up for the monthly recurring, he does like every month basically do that. So he did that once again the other day. So just wanted to go ahead and give a special shout out to Kurt Lusko as well for sponsoring, helping offset some of my data expenses on a monthly basis. Big thanks and shout out goes to everyone who has supported in the past, everybody who leaves questions, comments, goes ahead and contributes to this ongoing project to try and understand what is going on with GameStop, how its price action unfolds, what's happening behind the scenes here, right? Every sort of little inquiry there goes a long way to what we're trying to do here, what I'm trying to do here. Within the context of the broader GameStop community. So many thanks as well. Many thanks to everybody as well for our discussion last Friday. Right, last Friday we had a great live stream. Right, every Friday 4 p.m. close after market close. We have our weekly live streams. Great discussion in greater depth and detail about some of the principles we're going to be talking about today. So if you go ahead and watch this video and you say, "Man, I'd really love to get a deeper breakdown into some of that," go ahead and check out the recording from Friday's live stream. We go into a lot of depth there with respect to what we're going to end up seeing. So go ahead and check that out. Let's get to the main topic of today, and that is a big old green Uno reverse card. So obviously, right, those of you who have been following GameStop last week, we had this, into the beginning of the week, massive volatility, volume, dynamic up movement, right? GameStop went up from a price on Thursday of something like $28.50. Wednesday the 21st into a pre-market on Wednesday the 28th, went from $28.50 to $37.50, right? Massive options volume. I mean, we're talking 175 million in premium per day over this span. Really big volume. I mean, we're talking about maybe like 4 to 5x our daily average volume. Really exciting stuff, right? Only for then us to get this Bitcoin announcement. And strangely, unlike every other company that goes ahead and announces the acquisition of Bitcoin, GameStop dumps. So what's really going on there, right? What's happening there and what can we expect going forward? So to put this in brief, right? The assumption here is that, okay, well, really what is driving this type of volatility is not really the events or material changes in the company that are posted, let's say, in the news. We've talked about this here a number of times in the past. A number of others have as well. But suffice to say that what is really driving, let's say, volatility going into key events, so major expected announcements, things like earnings, right? We see a massive uptick in volatility going into these types of events. This one in particular was exceptional, even among those types of volatility events, right? We typically don't see volatility like this come onto the tape, but more than once a year. This is definitely the largest so far, and it is our largest since the volatility we saw last May and June in 2024. So in fact, right, we can even visualize this. We've been taking a look at this volatility chart that I drew up for a while here. So right, we can see, right, this is identifiable. Usually the highest volatility point of the year, if or one of them, we have a really big volatility peak sort of begins toward the end of May, moves up into early June, and then trades down, and then it settles. So right, what's really going on with these events? They do seem to coincide with earnings, but earnings is, I don't know, right? It's not necessarily something that would necessarily suggest the price would move up this dynamically. But what really seems to be the case here, I would argue, others have certainly argued, that these events are used as, let's say, outward-facing excuses for behind-the-scenes action to take place with respect to events such as swaps, dynamics such as swaps, and settlement of strategic fails to deliver. So the big thing going into this week that we've been pointing out has been this assumption and this understanding that we have a significant volume, a significant quota of ETF FTDs that essentially must be settled heading into this next week or 2 weeks, or perhaps not must, but ideally will be, given some upcoming deadlines. So June OPEX is a major upcoming deadline. This is usually something where it's a quarterly OPEX and a leap state, clearing up some stuff into this. In fact, we might actually be anticipating some of that as well, right? Something like these over these next 7 trading days. Big volatility up, a cool off from basically the 10th to the 13th, and then beginning on the 16th into the 20th, we'll basically see some of that volatility kind of move up again. Interesting as well, because June 19th, which is Emancipation Day in the United States, we have a national holiday, so this is only going to be a 4-day trading week. Will be interesting to see if we kind of get all that settled going into the pre-market there, but we'll talk about that as we come to it. This week, however, right, we have a number of overlapping ETF FTD settlement dates. So for those of you, of course, who have been following Richard Newton's channel, right, you know, a massive amount of credit goes to Richard for what he's been able to pull together in terms of data and modeling exactly how this works. He's got a lot of great visual tools, and he, you know, keeps track of all this data on a regular and rolling basis, and tries to make it more visually apparent and accessible on a regular basis. So definitely go check out his YouTube channel. Definitely go check out his spreadsheet. Really excellent stuff there. Much credit goes to him for what he's been working on these past 4 years. So right, he's been working on this to a certain depth and intensity, right, much longer than I have. So really much in his favor, and to everybody in the broader community who's been working on this. Right, in particular, we have a number of overlapping windows in terms of ETFs. So we have ETF FTDs, I should say, right? So the way this works, what seems to be the case, and we talked about this in the context of the Brno paper, the Mendel University paper in the live stream last Friday, which Richard, of course, has been using as the basis for establishing his own understanding and model of how FTDs, ETF FTDs are settled. There are 3 components to it, 3 components to it. So the first is the authorized participant window for going into settlement, for declaring an FTD. So there is a T+3 and then a T+6 extension, so up to 6 trading days from the date of a creation order coming in on an ETF. An ETF authorized participant may fail to deliver on certain elements of that creation order, may fail to deliver the creation order. At that point, in which case T represents the date of the recording of those FTDs. So when you see FTD data, right, it's not known that there'll be an FTD on an ETF until 6 trading days after the day in which they're failed. And then we'll begin a 35-day calendar settlement window following that T+6 period called T+35. It's actually 35 calendar days. And then at the tail end of that, right, if you were talking about an equity, you'd have standard settlement. You'd have T+1 would be when those FTDs would be expected to be settled. However, with an ETF creation order, DTCC rules specifically enable 4 days, up to 4 days, T+4, for the creation order to be processed. So we have these windows, 4-day windows. Of course, they can be sort of juggled between other ETFs in order to satisfy this, but In June, what's particularly interesting, and part of the hypothesis, I suppose, or one of the potentially suggested causalities why we have these sort of continually recurring points here of volatility going into earnings, has to do with concerns about clearing up these FTDs going into the end of the month. It may have something to do with swaps, but it may also have something to do with ETF reweighting. So coming up this week, we do have basically between now and June 9th, there are an anticipated 7 million ETF FTDs that must be cleared, ranging just two ETFs. So this is XRT, a favored ETF of manipulation with respect to GameStop, and IWM, so the Russell 1000 ETF. So 7 million shares basically of these ETFs must be covered, must be settled, must be created between now and pre-market, I suppose, pre-market next Tuesday, right? It just aligns right there with earnings. Those must be processed on the lit market. And as we've seen, what appears to have been the case is that more recently, this is something that takes the form of some immediate volatility kind of upward off the open, right? So just a shot up right off the open, and then a potential VWAP order that gets processed throughout the day. So Friday, we did see some of this type of price action, not so much a VWAP, but we did see this price action come up right off the open. And this may or may not have been tied to approximately 1.3 million FTDs on VT, so Vanguard ETF, that will also, I mean, it's window, right, because it's a creation order window. Yes, it began on Friday, but then we also have 3 days this week where we may see more of those FTDs covered. They don't have to be covered all at once, right? They can be covered over that 4-day span. By pre-market on the 4th day, the orders need to be put in. So in actuality, we have something probably closer to a total of 9 million FTDs that have to be cleared. I'm not sure about reweighting for VT, but certainly XRT and IWM have annual reweighting. So not just quarterly rebalancing. So there's quarterly OPEX. So after June, we have quarterly rebalancing, which will take effect following June 20th. So we have that into June 20th. But then the week following this, we have annual reweighting for these ETFs. So the annual reweighting for IWM takes effect following the last trading day of the month. This year, that's June 30th. So purchasing for reweighting will happen into June 30th. And it takes place for XRT 3 days from the last trading day of the month. So basically into the last week of June, we will have this reweighting for XRT and IWM. So I guess the hypothesis for now with respect to why we would see ETF settlement into this week, aside from, right, so this could end up getting caught or be potentially unprofitable, potentially difficult. Maybe there'd be this unappealing sort of forced settlement issue going into this reweighting that institutions might prefer to avoid, might prefer to deal with on the earlier side of things, basically going into quarterly OPEX. So we're basically expecting this here. This is the hypothesis for what's going to occur this week. And it would take the form of something like, right, a secondary, right here we can see the VT FTD. But it basically moved back up, right? Move back up something like here. Maybe we don't get all the way back up to 37.50. But this week, we'll take a look at our options data in a second, kind of a move over 5 to 7 days, kind of back to 35 before maybe moving down again off of earnings. And who knows, maybe Ryan Cohen's going to end up having some interesting news for the company, right? Maybe we start to kind of move back up again into or sort of trade in these upper ranges into June OPEX before then, swaps towards the end of July start to work their way into the equation, something like that. In terms of our options data, most of the stuff going into this week was pretty I guess as we would anticipate, right? Not something out of the ordinary, not a lot, not a huge amount of volume, not a huge amount of rolling. Definitely call side skew, slight bullish skew, or I guess overall because of a few bigger trades, a discernible bullish skew, but most of our strikes, not a crazy bullish skew. But we did have some interesting trades. And so we did have right at the close, somebody went in and bought up, about 1,500, I think, $29 calls. Very interestingly. About $1,529 calls, which basically we need to close this week, right? So they expire this week. So we need to see a close this week of 30, 50 or higher in order for these to be profitable. We saw some 30 puts come in. So about 3,000 of these, I think. So either somebody is anticipating that essentially we will not close the week much below 30, or they are perfectly happy, whoever this is, picking up about 300,000 shares of GME for somewhere around an average cost basis of $29. So very, very interesting to see that come on. That's certainly going to offer some intraday support from a gamma hedging perspective at $30, right? So as we'll see in a second, our $30 position this week is very, very supportive in terms of the anticipated direction of gamma hedging. But of course, right, the largest volume, largest magnitude order we did see is immediately on last Thursday, right? We saw all of this volume. We saw an intriguing amount of volume come in at the ask for these $125 puts, right? Kind of head on out. And then we saw bid volume pick back up. So either somebody else or somebody decided to just come right in and pick those puts back up for a premium exchange of about 16 million. So this again looks like a synthetic long stock trade. A lot of this looks like it's also probably hedged. It's also probably delta hedged. But certainly has the look of a bullish trade. Maybe it's something more neutral, but this may in fact be something to take advantage of interest rate. Just kind of have this cash, get this cash, and then get a bunch of leveraged interest rate return as a result of this cash, right? So the way this stock trade works, the put writer goes ahead and writes a deep in the money put and receives, rather than just going ahead and buying stock, because this trader will then have a significant amount of collateral given to them as a part, right? They'll take a credit, which they'll then use as part of the collateral for this trade. And they'll then essentially collect a leverage SOFR rate on this. So they'll be collecting, 16% annualized on the initial capital that they had, because they'll have about 3 times that capital being given to them as a credit. So it'll be, very interesting to see exactly how that works. But it's interesting that we have seen this type of volume come in right immediately before then we start moving up pretty dynamically to the upside, very curiously. So we can see how all of this came in yesterday. Max pain's at 29 this week. And as we take a look at our gamma landscape, right, we can see right there are all those puts there. We can see that GEX from those short puts. So a little deceptive, but very, very supportive. So we're going to get support gamma hedging wise from those short puts. A lot of calls, not only for this week, but for future weeks as well. So a lot of gamma hedging support at this position. We can already see pre-market we're trading over $30. If we do get some of this ETF settlement, we'll just run right up this until we run into some potential resistance here at 35, and then hedging runs out kind of up above that. We'll have to see how options traders reposition if we start walking our way back up. But really, it looks like the way we're set up, we're going to trade on the upper side of 30 heading into this week. So definitely keeping our eyes out, keeping our eyes peeled for how this is going to look, evaluating, understanding whether or not we understand how this ETF activity is working and its relationship to these events that take place toward the end of June. What I will say, of course, is I will use this as a reminder to everyone that our goals here are primarily epistemic and, not trade advice. This is not me saying, hey, run out, go, dump all your money into options, go nuts because, moon, ding, 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 woo, 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 right? Not what I'm doing here, right? You will remember that, of course, I never, ever counsel anyone to go out and just dump money into single leg long options, right? They're structured. They're not structured in your favor. They're structured in the favor of the dealer. Although we may be looking at some significant upward volatility here, I'm by no means counseling anyone to go ahead and attempt to trade that. It's very difficult. As you can see last week, it was extraordinarily difficult. Many people, even professional traders, were thrown for a loop by exactly how last week looked. So be careful, right? Exercise caution. I certainly exercise caution. I'll be more than excited to see what this week has to offer in terms of price action with respect to what we're investigating in terms of the relationship of our options landscape and ETF settlement and how these market mechanics work. So very exciting to see some of that play out. But as always, this is especially going into what I think will be a volatile period. Please do exercise caution with respect to your trades and investment. Not financial advice in any way. So so thank you very much, everyone, for watching and listening. Looking forward to tracking this day by day this week with everyone, and of course seeing where we end up at our weekly live stream on Friday. So looking forward to seeing you guys then. Enjoy your week, and thanks for watching and listening. Take care.